XRP family, they want you out. We just witnessed one of the most manipulated crashes in cryptocurrency history. If you want to understand everything that just happened and what's coming next, hit that like button. This is crucial, real-time analysis you need to see. What just happened wasn't random. Leading up to the market close, XRP was hammered. The futures closed Friday afternoon, but the price didn't just dip, it was crushed. From $3.10 just a couple of weeks ago, XRP plummeted to $1.25 on Binance in less than an hour. A 53% crush. Liquidations everywhere. Panic everywhere. But here's what you need to understand. This is the blueprint of institutional play. The S1 filings for spot XRP ETFs from Bitwise, Franklin 21 Shares, WisdomTree, and Canary Capital tell the story. These are not casual investors. They are the suits, the players with billions ready to enter the market. They don't buy at the current market prices. They engineer events, liquidate positions, and scoop up assets at suppressed prices. This is why the market always tries to climb without the retailer. Retail investors are flushed out first. We see the pattern again and again. The market dips, weak hands are shaken, and then institutional players move in. That's exactly what just happened with XRP. Now, let's zoom out and look at the bigger picture. XRP is not just another coin. It's a bridge asset designed for instant settlement across banks, clearing payments in 3 to 5 seconds, costing less than a fraction of a cent, and capable of handling up to 1,500 transactions per second. Compare that to traditional systems like SWIFT, which can take days to settle a single international transfer. XRP is the plumbing of the future financial system. So why does this matter now? Because institutions want control over the flow of liquidity. The XRP ETF filings are evidence that Wall Street wants in, but they want retail out. They want low entry points without competition. That's why this crash is not just a market event, it's a tactical maneuver. If you held low leverage or bought during the dip at $2.66, you weathered the storm. If you were overexposed, you likely got liquidated. This is the harsh reality of XRP market dynamics, and understanding it separates strategic holders from panic sellers. Now, let's talk about the aftermath. XRP under $2 didn't last. Within an hour, we saw a new floor forming around $2.20 to $2.30. Why? Because even in a manipulated crash, XRP's underlying adoption and demand remain strong. Financial institutions, banks, and payment providers continue testing and integrating RippleNet. XRP's real-world use cases, liquidity corridors, cross-border payments, and settlement hubs are still in play. Here's a key point that many overlook. The market can be manipulated, but utility and adoption cannot. XRP's efficiency is real. It's faster, cheaper, and scalable. Institutions know this. They also know that controlling XRP supply in the short term gives them the power to shape market sentiment, maximize ETF entries, and ensure minimal retail participation during critical phases. Think about it like this. This isn't a single crash. It's a reset, a cleansing of weak hands, and a preparation for institutional dominance. Every liquidation, every hammering of the price, is designed to set the stage for the next phase, ETFs going live, large-scale adoption, and a market that eventually rises without retail interference. For investors, the takeaway is clear. Do not panic. Understand leverage. Hold strategically. Watch institutional filings. Observe adoption metrics. The next major move in XRP will be driven by these fundamentals, not by random hype or news cycles. Now, let's project forward. When these ETFs launch and the market stabilizes, XRP is poised to become not just a top-tier crypto asset, but a foundational pillar in global finance. Institutions will control the flow, and retail investors will need to position themselves carefully. The efficiency of XRP, combined with its scarcity and strategic adoption, makes it a rare opportunity for those who stay informed and patient. This is more than a crush. This is XRP Black Swan, a moment that cleans the market, exposes weak positions, and sets the stage for a new financial infrastructure where XRP quietly becomes indispensable. So, if you're holding XRP, now is not the time to sell out of fear. It's time to analyze, understand, and position yourself strategically. Watch the floors being built. Watch liquidity corridors. Watch how ETFs roll out. The institutions are moving fast, and the market is responding. Those who stay educated and patient will be the ones to benefit when the next bull cycle arrives. Remember, this isn't just speculation. This is real-time market mechanics, institutional strategy, and XRP's path to becoming a core financial asset. And by understanding this now, you're ahead of the majority of retail traders who will be reacting too late. XRP family, stay sharp. Stay patient. Stay strategic. The black swan may have rained down, but the storm is clearing and a new floor, a new opportunity, and a future where XRP dominates is emerging. Hit like for this real, unfiltered analysis because staying informed now could make all the difference in the next wave of the market.